class. I'm glad to be with you here today. Today we are starting Chapter 6, and we are moving into a new area. This new area is covering companies that sell goods. Up to this point in time, we've been doing our income statements, and the revenues have all been services. And you just had revenue, and you had operating expenses. We are now moving into the sale of goods, which creates an extra complication. So we start out and we have sales and whatever that amount might be, and now we have to start accounting for cost of goods sold. This is an important number that users of financial statements need. Maybe you need it because you're managing the business. Maybe you need it because you are loaning the company business. But from now on, we must do a subtotal on our income statement for gross margin. Okay? So what we call the multi-step income statement is now what we have to do from now on. The multi-step income statement gives us a lot better information for our users and our managers. Once we subtotal at gross margin, then we will collect up the operating expenses. Up to this point in time, you've just had a list of expenses. Now, operating expenses are the things that we do that we have to spend money on to generate these sales. Okay? So they are selling expenses and what we call general and administrative expenses. One thing you're going to notice is that interest income and interest expense are now what we call below the line, because after we subtract these basic selling expenses and general and administrative expenses, and you can either have them broken out or people can bundle them, but whatever this works out to be, okay, we have to have another subtotal called operating profit or operating margin. Those are interchangeable words. Okay, so a gross margin of 50 minus operating expenses gives us an operating profit of 20. Now, if we do have interest income or miscellaneous income or interest expense, anything that doesn't really have to do with why we come to work every day. Interest income is only your main revenue if you were an investment company. But for most of us, we're making or selling something else, and interest income is just that little bit of stuff we make when we have extra cash in the bank. So we have a category called other income or expense, which we show it like this. Income are positive numbers, expenses are negative numbers, bracketed. We subtract that, and we're going to end up with net income. I could get more technical and say we also usually need to be subtracting income tax, but we'll talk about that later. So maybe I've got some interest income, and it's probably just a little bit. And if I have a loan at the bank, I probably have interest expense, or I would have interest expense. So $20,000 plus interest income of $1,000 minus interest expense of $2,000 gets us to a net income of $19,000. So you can see that we have taken 1, 2, 3, 4, 5, 6 pieces of information, and we have really complicated it with a lot of extra subtotals. But those subtotals give us really good information. For example, if I was looking at this company, I would be like, oh, wow, they have a 50% margin. Every time they sell something, they keep 50 cents on the dollar. Can you see that? This is 100%. This is 50%. Okay? Last year, maybe it was higher or lower. That's interesting to you as a manager or a lender or an investor. I can watch how these change across time. I can see operating profit is how I want to be judged as a manager, because the interest expense, the reason interest expense is not an operating expense is because it is as a result of your financing decision. Okay? In other words, I could have started my business by borrowing money at the bank. Maybe you started your business by getting the money from investors. I'm going to have interest expense. You're not. However, we might equally be running our businesses the same way. That's why operating profit is important to us. That's how we compare ourselves to other companies and competitors, etc. Okay, so at this point in time, I want to do a short multi-step income statement. I'm going to do SE2 and SE3. This is Chapter 6, SE2 and SE3. I'm going to do them side by side so that we can look at the differences. Okay? Chapter 6, SE2 and SE3. It says to take the same information and do a single step and a multi-step income statement. So we're going to put them up side by side. First, we're going to do single step. Okay? We've got net sales, $4,800. Doesn't matter what method you use, you're always going to start with net sales. And of course, another thing you learn in this chapter is we've got sales, and then we might have sales returns and sales discounts, and that reduces our sales, okay, to net sales. We've got net sales. Single step, I'm looking for all the revenue on single step. Cost of goods sold, general expenses, interest income. I see interest income. In a single step, I bundle up all the revenues and I bundle up all the expenses. I don't care what order they're in. Okay? So there's total revenue. Then I've got expenses. I've got cost of goods sold, $1,680. I've got general expense, $900. I've got interest expense, $420. And I've got selling expense, $1,110. Okay, so my total expenses, let me get a check figure for that so I don't have to stand there and add it up in my head for you. So total expenses work out to be $4,110. And we end up with a net income of $870. Now, what you're going to see is that we're going to end up with exactly the same net income, but the statement itself is going to look very different. It is going to be much more interesting to the users. So I'm again going to start with net sales. But I'm going to save interest income and put it down below with other interest and expense. So the first thing I need to do in a multi-step is I need to take cost of goods sold away from sales, because I want to know what I make just off the product without my other expenses included. Okay? Then I'm going to subtract operating expenses. Well, out of these expenses here, I've already used cost of goods sold. I need selling expense, and I need general expense. And I am not, there are different ways to do this. You can have different kinds of subtotals. You can inset your expenses. You can single line after your subtotals. I don't care how you do it. You just have to have the right subtotal. This is gross margin up here, or sometimes they call it gross profit. This is operating income, operating profit, operating margin. You see it different ways. Or income from operations. Operating income and income from operations are the same. Okay, now I'm going to list my other income or expense. We've got interest income of $180, and we've got interest expense of $420. Notice that I bracket income and expense because these historically are just seen as summing down from operating income. And that will get me to a net income of $870, just like before. Again, you could net these and subtotal again, which would be negative 240. Okay, then 1110 minus 240 gives you 870. In a nutshell, here's how we take 1, 2, 3, 4, 5, 6 pieces of information and complicate it quite a little bit. For you to get full credit, you would need to know that you had the subtotal here, know that you had the subtotal for operating income before you do net income. Okay? That concludes this video. I'll start another one for another couple of problems. Thanks.